In today's video, we're going to talk a little bit about the Orangetheory franchise. We're going to go through if it's a great opportunity or if it's something that you should pass by. So what is an Orangetheory franchise? Orangetheory has been on the cusp of innovation way before Peloton and more of these in-home fitness programs have looked at where you track your vitals and adapt the exercise or see how you should perform and how much you should push yourself based on how your heart rate is and other vitals. So Orangetheory has been doing this for 11, 12 years, and they've been operating in physical locations where you have a lot of technology players entering in where the hardware could be provided by Apple or they could have their own hardware. And you look at different businesses like Peloton that have now leveraged a lot of the shared learnings from Orangetheory to really develop this data-focused fitness. We need to better understand how much it costs to open an Orangetheory, profit potential, sales, how it compares to its industry peers to really decide if it's a legit franchise opportunity to explore or something you should pass on. So let's get right into it. Orangetheory was founded in 2009 in Boca Raton, Florida. From what I've heard, early franchisees could open an Orangetheory for as little as $200K, $250,000. And in 2014, it started creeping up where the midpoint investment to open up an Orangetheory franchise in 2014 was around $500,000. Fast forward, according to their franchise disclosure document for 2021, the midpoint to open up an Orangetheory franchise was a whopping $1.3 million. Now, part of this is the franchise fee, which went way up from its humble beginnings back in 2009 to now $60,000, which is pretty high for a fitness franchise. They've opened up a lot of locations. They have over 1,000 locations, and they're operating throughout the United States as well as internationally. Now, the main franchise cost when you're opening up an Orangetheory fitness franchise is the equipment and also the leasehold improvements and basically to make the space ready so you can operate an Orangetheory franchise. So the franchise fee at $60,000 is pretty high compared to fitness franchises. Also, the royalty is 8%, which is 2% plus above what the average fitness industry royalty is. So it's a bit of a costly franchise, which is fine if the numbers back it up in terms of sales and the profit. However, our analysts went through how much money Orangetheory corporate was making from franchise royalties and then looked at how many locations were open the prior year. And from those numbers, in 2020, the average Orangetheory franchisee was making a little over $500,000. Now, keep in mind, because of COVID-19, many of the locations were forced to close. However, if we look at the 2019 numbers, they were better, but based on an investment of $1.3 million, in 2019, the sales figures were a little above $900,000. Now, the industry average for a profit margin for a fitness business is 9.8%, say 10%. So in 2019, even if you were operating at a profit margin of 15% and you invested $1.3 million to open up that Orangetheory, we expect it's going to take 10, 11, 12 years to recuperate your initial capital investment. If you're looking just to open up one Orangetheory and you're happy to wait 10 years to get your money back on average and what the expectation is, and you're more doing it because of the passion, just know that it's more because of the passion and it's not because of the financial gain. One bit of good news is when you have multiple Orangetheory locations, 5, 10, ideally 10 or more, then you could potentially sell your system to a private equity fund and the multiple on sale goes up to basically from half the sale. So if you're doing sales of $1 million, each location would sell for $500,000 if you're a single unit operator. Once you're up to 10 locations and the average of each one's doing $1 million, say, you could sell it for 1 to 1.5 times the sales. So can you recuperate your money faster if you open up 5, 10 locations and you're using leverage and you then sell it to a private equity company? Probably. Are you willing to take out SBA loans and sign personal guarantees and also provide your house as collateral for the SBA loan or other financing mechanism? You have to understand if you're willing to take that level of risk. An important note is Orangetheory is one of the most successful franchises when you consider the SBA loan success ratio. As of 2020, 180 Orangetheory franchisees paid back their SBA loan in full, and 0 were charged off or defaulted. Again, that was 2020. In 2021, 2022, as we analyze the numbers, will that charge-off rate or default rate increase? Probably, but I don't think it's going to be half the Orangetheories defaulting overnight. And they're definitely doing a lot better than their other fitness industry peers. That being said, if you're serious about making money in franchising, I would probably look at other types of businesses, especially in the service sector, even healthcare, and generally avoid the fitness industry unless it's something that you're very passionate about and you're happy with prioritizing your passion over the profit potential of the franchise.